What's up, everybody? Happy Sunday. This is Tim Sykes. I am coming to you from Italy, and I have a very important lesson for you. The last time I made this similar kind of lesson was this one with AVXL. It was at 75 cents. I call it the best biotech penny stock right now. And it wasn't just about like, oh, let's buy this stock. It was about why am I buying this? Why am I long? What is the upside? What is the downside? How do you structure this trade? That is what I love about teaching. I make these video lessons and DVDs so that you can structure your own trades. I never want you to follow my alerts or piggyback anyone's trades. The most successful traders that I know all know how to have a plan in place before you risk your hard-earned money. And that is when you really can begin to excel, not just in terms of monetary gains, but in terms of freedom. That's what I love most about my job. You know, I've made over $4 million now. I have several millionaire students, but all of us, all of my top students and I think can make more if we didn't have and enjoy our freedom so much. You know, I'm trading this from freaking Italy, and somehow in the past week I made roughly $20,000. Not AVXL. This is just an example of a video. AVXL is now at roughly $1.30, and I was buying it right here on this day. And a lot of people thought that, oh, I'm buying an overvalued stock. It's a Sykes pump. And, you know, I get all kinds of doubters and critics. It's kind of laughable. Feel free to bet against me. Feel free not to believe anything I say. All I can do is teach from 15 years of experience and 7 figures in profits and experience. And I show every single trade. I show my entire track record, which sadly is more than, you know, what a lot of other quote gurus and experts are willing to do. I highly, highly, highly encourage you, if you're going to learn from anybody, to ask this expert or guru to show all their trades, to show a multi-year or obviously, you know, preferable a multi-decade track record. That is why me, you know, Superman, Michael Good, and now Tim Grattani, who's only been trading for 4 years, but at least he shows exactly how he's made nearly $3 million. That's why we are, I think, the best ones to learn from in an industry that is very, very seedy. A lot of people promise really good things like, oh, we have a great little community. Bullshit, bullshit, bullshit. Show all your trades, show everything. And that is why, you know, despite a few critics and doubters, when I make a video like I did, you know, showing the best biotech penny stock right now, and it was at 75 cents, so it's all time stamped, and now the thing has nearly doubled. So I just want to show you that example. But what's really been working lately, and this was, you know, I bought it because it was a Seeking Alpha hype play. The article said, you know, I mean, you can watch it. You can Google the best biotech penny stock play right now. It's on my YouTube. Only 10,000 of you have even viewed it. But that was based on an article win, you know, a kind of hype from the press. I really prefer earnings wins. So one of my biggest winners the past few days has been this CRK, which I bought at $1.34, time-stamped in real time. This was 10 days ago. And I said, earnings winner with 14 million shorts breaking out to new day highs. This could be a runner. Goal is to make 15 to 30 cents a share. Risk is, oh wait, let me move this. Risk is 5 to 10 cents a share. And this was when CRK was at $1.34. So a lot of people said, oh, Tim, the chart is not good. Why are you buying it? I bought it right here. And the thing nearly tripled. So this is a short squeeze. So earnings winners, this is earnings season. Earnings winners are not defined by, you know, how good the company is actually doing. It's not defined by record profits. This is why CNBC and all these business channels that talk about that stuff have record low ratings. And I have record high subscribers because I focus on patterns that work. I don't even give a shit about how CRK did financially. I don't even care really that they're an oil and gas play, which is not my favorite. But the fact is that there were so many shorts, and it was an earnings winner because it reacted to earnings well. And you have to think, wait a minute, over the past few years, CRK is down from the 20s down to 1. They reacted to earnings well. There's 14 million shares that are short. These shorts might want to cover their positions. And if the shorts want to cover their positions, they have to buy to cover, which means that there's going to be buying pressure, probably. And I obviously underestimated. I'm not claiming, oh, I knew it was going to go from 1 to 3, okay? I just saw the initial spike, and I was buying it in the 130s, and I sold too soon, way too soon, but to be fair, I am traveling, so if a stock doesn't really spike perfectly, you know, it took roughly a week to really to go, you know, supernova. So if it doesn't spike right away, I'm not really probably going to profit that much. FORD was an earnings winner that I bought on the dip. I missed this initial spike, but when you see an initial spike, this is the key to earnings winners. Always keep an eye on it, because if the stock is spiking in reaction to earnings, people like what they saw, no matter what the reason is. It doesn't matter if it was a loss on the quarter, if it was a loss on the year. For whatever reason, people were incentivized to buy. They were influenced, they were inspired, whatever I word you want to say. And you could say, oh, this is fraud, this is manipulation. No, it's just how penny stocks move. And the beautiful thing is that you can profit off this. I missed this initial spike. I wasn't there. I'm exploring wedding venues and I'm traveling all over the place. So I'm not going to be there 100% of the time. So for me, when I'm traveling, I actually do better because I'm not over trading. That's my number one problem. We all have different problems. I overtrade. So when I'm traveling, yes, I might miss a few trades, but I get a general sense of the best patterns that are working. So while I missed this initial spike entirely, I bought the dip right in here on Ford at 133. Where did I say? I said bought this earnings winner on some late day strength, holding its gains very well, tons of support in the 120s, big morning spiker all the way to 4-ish, given how AQXP ran. On day 2, pre-market morning spike. This could easily get to the mid to high 1s or even low 2s later today or tomorrow. And this was one of my best calls in years, where over the course of the afternoon and then after hours and then the morning spike the next morning, it got all the way up to you can't see it, but it hit 235 pre-market, and even 230. I bought it at 130. So you have $1 a share of upside here. And yes, even though it's down, you can still dip by it. When it came down to $1, it went up another 50-60% on Friday. So always be looking at earnings winners, especially when they're holding support right in here. What was the risk? What was the risk? I'm buying a stock that's off of its highs at $4. I'm buying it at 130-ish. And, worst case, it doesn't bounce. I get out at 120, 115, and I lose 10, 5, 10, 15 cents a share. The upside was $1 a share, and I didn't sell it all at 230. I sold some in here, and I sold some in here, and sold some in here. So I'm not going to time it perfectly, but I still made nearly $10,000. That was pretty good. Now I want to talk to you about the play that I see right now, which is YOD. And YOD spiked, as you can see right in here, in reaction to earnings. This was an earnings winner. So some people are like, Tim, how is this an earnings winner? They had losses. I don't give a shit about losses. I am not CNBC. Do I look like some ugly bald man on TV who's right 35% of the time? No. I'm a full-headed, full-figured Jewish man who's right about 70-75% of the time, and I'm not on TV, probably because I don't play well with others. I have a negative attitude. I call it like I see it. I'm totally transparent. I talk about, ugly penny stocks, and I talk about turning a few thousand into a few million. None of this is really what finance wants to hear. They want me to go on CNBC when I was going on to mention 10, 15, 20 tickers. Why do you like Starbucks? Here are 5 stocks for Father's Day. They make ties and alcohol. Bullshit, 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 bullshit. Okay? This is what I care about, this initial spike in reaction to earnings. And YOD was not your typical earnings winner. It wasn't up 20, 30, 40, 50%. I know a lot of you guys are asking me that. You're like, why do you care about this? Well, I'm going to explain it in this video lesson. I have a little time, and I want to share with you that this is not random, and that this follow-up spike all the way to 250 and how I'm up nearly another $10,000 to end the week is predictable. And it's not because I'm pumping it. It's not because of manipulation. It's because earnings winners can run. Remember, CRK, I was buying it in the 1s and it went all the way to the 3s. I underestimated it. Ford, I was buying it in the low 1s. It went to the low 2s. These are just 2 of my trades. I also bought TTI on the dip. Where was it? Right here at like 677. And I sold too soon because it didn't, spike properly right the next morning, and I was taking a flight, and 10 minutes later it did spike. But even on this earnings winner, you can see there's a clear trend. After the initial spike, even though it failed, you have a follow-up spike, follow-up spike, follow-up spike, and now uptrending. So I was buying this one. And these are all examples of earnings winners. And now REXX, I forgot to mention. I was thinking about buying this one on the dip. Where was the earnings win? One of these days, I don't even know anymore. I think it was like right in here. I want to believe that this is the earnings win, but I think I was buying it or thinking about buying it right in here at the 270s, 280s. Didn't miss much. I missed like 50 cents a share. But the point is that this is an earnings winner too. And if you look at the overall chart, it is terrible. Normally, I don't like buying terrible charts, but if you have enough shorts and you have a terrible chart, the stock can spike again. It can come back up to new highs, not necessarily new highs, but it can scare shorts. So new day highs, new weekly highs. And that scares shorts. And shorts are like, you know what? I don't want to bet against this anymore. So they buy to cover, and that pushes the price up even more. YOD has a few shorts, but more importantly, it has this solid base here at roughly $2 a share, going back for the past 6, now even 8 months, where it has tons of support at 2 and even support at like 210. So when I was buying YOD the other day, there just wasn't that much risk. I was buying it at 216. Let me go into a shorter term chart. I was buying it on the dip here, after the initial spike. And again, I don't like chasing the initial spike. I like buying on dips for earnings winners because you never know, how high they can go or how much they can consolidate afterwards. The key is looking at a stock that spikes initially and then putting it on your watch list and, seeing, wait a minute, this can keep going. So I bought it here at 216 and then I was doing nothing on Friday and I wasn't too concerned because again, what is my risk? You always have to think, what is your risk when you buy a stock or when you get into a stock? And my risk was hardly anything. It's just a question, can it run or not? It's more of a time risk. So I wasn't even watching. I specifically said in the buy alert, I think this can spike to the mid twos, maybe even the high twos because of the initial earnings win. And more importantly, with this one, as opposed to other ones, it has a solid base, so there's just not much risk. And as you'll see in a second, when you go into the earnings conference call, they add a few bullets that they mention, and they're probably going to fire those bullets pretty soon. So when this stock started spiking right here, I wasn't buying it on Friday again at 216 or 220 or anything. I've had a long-term position in this for weeks or even months at around 220, 225. So I've been basically break even. But what really excited me is this huge volume spike, okay? People were buying big. And so when you have an earnings winner that has a few shorts, I think it's like 1.6 million, which is not bad for a stock that trades a few 100,000 shares a day, but there are shorts that can cover, there are big block buyers, and there's tons of support. Most importantly, you have the earnings conference call. And if you look at, Seeking Alpha does this fantastic. Who can really help this stock spike? Chardon Capital. This is where experience comes in. This is why I have 15 years of experience, and that helps me on every single trade because I know who Chardon Capital is. They have once upon a time helped pump YOD and XXII. Even though both of those marketing efforts failed for the stock and both stocks came down, they can really influence a stock higher. So this is very good when they're on a conference call. If you read the conference call, blah, 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 this is good, but this is cool. So they're a strong quarter of growth with revenues of 1.5 million, quarter over quarter growth of 710%, or year over year 710%, and quarter over quarter growth of 44%. So these guys, once upon a time were hyped up as the Netflix of China, and then reality kind of set in. They don't really have that many revenues. It's just like, who's actually watching these movies in China? Isn't every movie in China pirated? And if you look into this conference call, obviously revenues are going up, very nice. That's cool. This is a good statement. Yuan demand is starting to hit its strides. We're seeing encouraging consumer demand. We're structuring our movie content offering monthly to give consumers the latest titles. So, they're in the exact same business model as Netflix. But this is where it starts to get interesting. Okay, so they have revenue growth. That's fantastic. They still have some, they have gross profit of 650,000 compared to a gross loss. But they still have, selling, general, and administrative expenses. So overall, their net loss was 1.3 million compared to 1.1 million. So, the purists are saying, but they're unprofitable. Why would the stock go up? Well, again, you have to think about stocks are pricing in forward events, okay? It's not enough to just have profits now. It's what are you going to have in the future? And so stocks react to future hope and future, lack of hope. If a company has a product that's going to be overwhelmed by competitors. These guys are, quotes, starting to hit their stride. This is very important too. As of June 30th, they have 6.9 million in cash. So if they're losing roughly $1 million a quarter, they have about a year and a half, a year and 3/4 of cash. But revenues are growing more and more every quarter. So those losses are going to start to decrease. And then the question is, can they even become profitable? So here is Chardon Capital. This is a very important question. Thanks for taking my questions. Congratulations on the numbers. Good numbers. Let me ask you, blah, blah, blah. So you have basically a stock promoter, for lack of a better word. They're doing financings. They're trying to hype the stock up. And they say congratulations on the numbers. So the analyst is impressed, but he wants a breakdown, blah, blah, blah. Then they talk about, specific deals, which I don't really care about. This is where it starts to get interesting. Keep going, keep going. So this is, they have movies on passenger trains, thanks to all their partnerships. And they say that the number came back from C Media tells us roughly 50% of the passengers on the train will turn on their mobile phones, will connect to Wi-Fi. And out of those 50% of passengers, 80 to 90% of the people are actually watching a movie. So that is huge. Nearly half the people who turn on their mobile phones are partaking and saying, this train ride is long and boring. Let me watch a movie. That is fantastic. So they have a few trains that are deployed, but they're going to keep deploying more and more trains. So revenues should keep going up. They also have Huawei, which is a huge smartphone maker, and that's one of YOD's partners. And so they say, our quarterly cash burn is 2 million, so we have, quite a bit. This is very cool. But I believe we will be able to achieve our business goals. We are achieving clearly a positive operating cash flow sometimes next year. So they have enough cash to last into next year, and then they expect to be profitable. So this is very positive talk. And YOD, if you've watched the stock for months and years like I have, they've never been positive about business. The stock has always kind of been disappointing, and their revenues have always been disappointing. So is this stock turning a corner? That is the difference. That's why, normally I look for 20, 50% run-ups before I say it's an earnings winner. This is an earnings winner just because they didn't suck. And that is the first time I've ever seen them not suck. And while that might not be huge, again, what is the risk? A lot of people say, Tim, the stock just isn't up enough compared to your normal indicators. And I said, well, yeah, correct. And I specifically said this in the buy alert. I said, this is not a typical earnings winner. I'm going to hold this for several days and I'll make a video lesson when I have time. So now I'm explaining, when you have 5 or 10 cents a share of risk, what is the risk? Tell me that. You have tons and tons of support here at 205, 210. And I was buying it here at 216 and my long-term average is roughly 220. And now it is finally taking off because people are reading about it and people are reading that they're going to be cash flow positive. And if you type in Chardon Capital, YOD, this is probably what caused on Friday where, they said, look at this. Chardon has another impressive, or YOD has another impressive quarter. Chardon Capital affirms buy rating. And they basically, if you read this, they have a $5 price target lifted. Well, this was back in November. So Chardon has been around for a while on this stock. They lifted it on the Huawei information. But YOD, the problem is not all upside. It's not like, oh my God, the stock is going to go to 1 million. It's gotten to this 250 level once. It got up to 270 here. It got up to 244 here. So the question is, can it break out, or is this, look, it got to a high of 245 here. It got to a high of 337 here. It got to a high of 261 and 280 and 243. Now it's at 249. So this is the latest attempt after, well, right here too. You have 1, 2, 3, 4, 5, 6, 7. This is the 8th try that it's trying to break the mid twos. And I don't know how far it goes, just like AVXL, when I was buying it at 75 cents a share. I didn't know how high it went. But AVXL and this one both had the right indicators that could push it higher. And this one is heading in the right direction. So when I buy it at 220 and 215, what is my risk? Always, always, always consider your risk. That's why, I wouldn't necessarily buy it here at 250, okay? Chardon Capital is promoting it. I'm sure that they're going to pump it out, and they're probably trying to do another financing round if the stock spikes up enough. Maybe YOD will take advantage of this and issue a press release about some new, licensing deal or something that could pressure it higher. I don't know. All I know is that when there are, indicators and very little risk, indicators that it could go higher and go higher considerably. It has a history of spiking. My long-term newsletter subscribers know that I bought this and I was holding this, I think, right in here. For several months I've been holding it. And the whole point was that this stock has spiked so much, 20, 30, 40, 50% in a day or two in the past. It's probably going to do that again. And now it is. So I don't say that it's going to go to 6 or 7 or even 3 or 350 anymore. I don't know how high it goes. But this is the beauty of buying penny stocks when there is not much risk and when you have a plan. Okay? This is why I'm up $10,000 as I'm overlooking this beautiful bay in Portofino, Italy. I'll post a video, I'll post some pictures on my Instagram account so you can see where I am doing this from. And I don't know how high it goes. I totally underestimated AVXL. I didn't even think that it could get to $1, let alone $1.60. But it's okay to underestimate. It's okay to be wrong if you're on the right track and if you have a plan. When I bought it at 75 cents, I had a very specific plan that it could retest this former high back in 2013 and maybe even break it. I had no idea that it would go on to double it inside of 2 weeks. But the cool thing is that it did. That is the best thing about penny stocks, and that is why I'm rich. As I said when I bought AVXL, I had a very similar pattern back in 2000 when I made over $100,000 as a freshman in college. And I totally underestimated it. I had two $70,000 profits last year, both of which I underestimated. One was long, one was short. And had I held a few more days on each of them, I could have had $200,000. So I'm not here to tell you how high YOD can go. I'm here to show you why it's possible to buy low and sell higher. And I don't know how high it can go. AQXP, I had no idea that it was going to go from 2 to 50. But those of you who came to my Madrid meetup, you trading challenge students, know that when it was trading at pre-market in the 15, 16s, I said, I have no idea how high it can go. Too many short sellers think that this thing can only go from 2 to 10. That opens the door to a short squeeze. And short squeezes are beautiful things, and they are not talked about hardly at all because most people do not short sell. A lot of people are like, where is the real-time short selling information? Guys, the short sellers make up less than 0.01% of the market. I know I talk about short selling a lot, so you think, oh, everyone does it. No, I'm a weird-ass guy. Okay, with a weird ass strategy. And that's part of the gift and the curse. That's why I have several millionaire students when no one else does. Although Superman has a student getting very close to $1 million in profits. So I'm very proud of him. Superman, had a beautiful pick with another earnings winner the other day, EFOI, and he was buying it in the 14s and selling it in the 18s. So earnings winners can run. Low float stocks can run. Stocks with a lot of shorts can run. The whole point of this video is not to chase it, not to buy EFOI here at 19, but consider buying it here on the dips in the 14s. This has been on my watch list for several days. Same thing with REXX. Not to chase it here at 335, but maybe in the mid 2s, CRK. Not to chase it here in the 2s or the 3s, but learn to spot it like I did in the low 1s. Even when I'm traveling. A lot of you guys are sitting at home, you're going to school or you have a job and you're like, how does Tim find all this stuff? It's the exact same strategy as always. This is why I have my DVDs. Watch my How to Make Millions DVD. Watch Tim Fundamentals Part 2. I'm looking at big percent gainers, then I'm working my way back and I'm seeing what are the catalysts. What's the news? And can this news propel it? I know a lot of traders who totally ignore news. I don't get that, It's cool. You can try whatever strategy you want. I like news. I like earnings winners because it can propel stocks for several days or several weeks. And if you've noticed, if you've been watching my videos and my trades for any amount of time, you see that I'm not the best timer, and that's cool. I understand that I'm not going to find the bottom or find the top of any stock. But if I'm on the right track and I have the right indicators and I'm, getting a sense that this stock can really move in the next few days or the next few weeks, then I am very, very happy, and usually I'm rewarded. So congrats to all of you who rode AQXP. A lot of people thought that this stock, was a fraud or manipulated. No, it was a short squeeze. And I'm sure some amateur short sellers who didn't want to buy my short stocking DVD are now paying the price. If you don't invest in your education, the market will educate you in a far worse and a far more expensive and a far more unpleasant way than I ever will. So you can either learn about these patterns and you can learn to profit and understand the risk, or you can ignore all of my DVDs and video lessons which catalog moves exactly like this. A lot of people say, oh, I've never seen a stock that has gone this crazy. Well, I have. I've seen hundreds of them, and I've cataloged them. Go watch my Penny Stocking Part 2 DVD. YOD, I believe, has spike potential, and it's already beginning to. I don't know how high it goes. I don't care. What I care about is the fact that I bought this and it's actually working out very well. And a lot of people are confused. How is he doing this? How is he manipulating this stock from Europe? Does he have people working in boiler rooms? No, I don't have people working in boiler rooms. I'm not manipulating it. The stock isn't manipulated. It's an earnings winner. And earnings winners can keep running for several days and several weeks as more and more people put together the story about Chardon Capital and how this company will go cash flow positive and how their revenues are finally growing and how this might actually really spike to the mid twos, which it already has, the high twos, or even the threes, which makes my buy at 220 and 216 pretty damn freaking good. So now just watch it, okay? I'm not saying chase it here at 250. Maybe it goes up, maybe it doesn't. All I know is that this kind of pattern will happen again and again, and I want you to be better prepared. So watch stocks this week. You guys need to be in my chat room between, I'd say, 9 and 10 a.m. Eastern, but even better, 8:30 a.m. Eastern, because a lot of these pre-market winners have been great for spiking really quick, and they've even been better for shorting. So you can learn to go both ways, like my top student, Tim Grattani, who's now closing in on $3 million in profits in 4 years after starting with just $1,500 of his own money. And I have several other students like Azimjan, who started with 2,000 and he's over 300,000. It's not an exact science. It takes a while. It's not necessarily easy, but trust me, it's worth it and it's beautiful. And you have this information again and again and again, and you can partake in these kinds of plays again and again and again, year in, year out, decade in, decade out, whether you're in America or Portofino, Italy, or Rio, or freaking Beijing. You can be anywhere in the world if you have knowledge inside of your head. And that is what I'm trying to get at you with. This is very far from an exact science, but if you have a few key indicators, namely earnings reaction spikes, which is in my definition an earnings win, number of shares short, volume, you got to think about the risk. Where is the base? If you're wrong and the stock doesn't spike, where can it possibly go down lower? Like YOD, I barely risked 5 or 10 cents and I'm already up, 30 cents a share on my position. So already it's proving to be a very good risk reward. And, you have to kind of understand about companies like Chardon Capital that try and help companies raise money, and they're also an analyst, so they're a little biased, a little conflicted, and that's good. You want promoters, you want hypesters, you want that kind of momentum, because that creates short squeezes, that creates stock spikes, that creates opportunity. And if you hate companies like YOD, then short it into the spikes. Remember, it has failed every single spike in the past. So if you don't think that it necessarily deserves to be higher priced, go ahead and short it. I wouldn't recommend it though, as I talk about in my weekly trading challenge webinars again and again and again. Do not short earnings winners. A lot of people were shorting CRK way too early. When they thought that, oh, it's a Sykes pump, it's up from 130 to 150, let me short it. And then it goes to 370 or not 370, it got to like 330. And they're like, wait, Sykes sold, maybe it wasn't a Sykes pump. It's an earnings winner. If you doubt the validity of my claims, go ahead and bet against it. I have no problem with people doubting me. My first millionaire student thought I was full of BS. All I can do is share patterns, share indicators, share strategies, share structured trades that have worked for me more times than not over 15 years. I'm not going to be right every single time, but sometimes I'm going to be dead on, more dead on than I even realize. So I need to have more confidence and more patience. Obviously, that's definitely one of my biggest problems. But I'm not the best trader. If I can make $4 million doing this, I have no doubt that you can make 4 million or 7 million or 10 million, given the fact that now you have all these video lessons, DVDs, and you trading challenge students have literally hundreds of hours of webinars, not just from me, but Michael Good, Tim Grittani, and now Mark Crook too. So all of these successful traders are teaching what kind of indicators they're looking at, what makes them different, because this is, remember, a world where most traders lose money. Most people who teach trading are absolute frauds. And the key is learning from those of us who are real, who have documented, proven success. So remember to tell your teacher, show me your trades, show me your track record, show me your audits and your income statements. Otherwise, I do not believe you. That is what I really want, and that does not necessarily make me a popular figure in the trading world, because sadly most people would fail that test. I would not fail that test. That is why my business is booming. Superman would not fail that test. Tim Grittani would not fail that test. Michael Good and Mark Crook, we share everything. So please learn. I know I rant a lot and you just want stock picks, but everything is connected for me, okay? This is more than a job. This is a passion. This is a way of life. And if you're going to become a millionaire, starting with a few thousand, or some of you are even starting with a few $100s, you have to really want it. This is not just about hot stock picks. This is about passion, drive, dedication, sacrifice, and ultimately independence, freedom, and achievement. Thank you guys. Have a good rest of your weekend. Watch YOD. I think it can run some more. We'll see.